So as Alibaba continues to hemorrhage in price, I think it's timely to address all the different potential elephants in this Alibaba room. So the most common elephant that I see wandering around is this idea around a quote-unquote country risk. So many would argue that, yes, China is cheap today, but what makes you so sure that it will go back up? So my first reaction to these sort of commentaries are, what is the implicit assumption that is being made here? So going back up implies that they were once expensive, right? So let's take a look at some data points. So just comparing the two most exploited metric, forward price to earnings and market cap to free cash flow. So in 2019, forward PE can go up to the highs of 30s and 40s, and currently it sits in the low teens multiple. And in similar fashion, market cap to free cash flow can go up to the north of 40s and 50s in 2019, while currently it's in the range of 20s to 30s. So my natural question to them would be, why would this time be any different? So why would valuations on these different Chinese companies be suppressed perpetually? So I've yet to find a convincing argument. Maybe you can tell me why. That said, I do agree that if the premise of the argument of having a very low multiple is because maybe the underlying business is deteriorating and the financial health of the company is slowly dwindling away, then yes, the company probably deserves to be punished. But the last I checked, I don't remember Alibaba reporting maybe a negative 20% year-on-year growth on its top line. So the only thing that deserves being punished for is when you forget to smash the like button. So before I deduct your social credit score, please do me the favor and yourself the favor by gently tapping on the like button. By the way, for those of you who are fans of Jay Chou, Moomoo is currently running an aggressive campaign where you can stand a chance to win free concert tickets to Jay Chou's World Tour in December 2022 after a $20,000 initial deposit for new users. So the Cat 1 tickets are at the center. So tickets are issued on a first-come, first-served basis, so don't let this chance get away. For investors who still don't have a Moomoo account yet, I simply just don't understand. You can stand to get welcome rewards worth up to $190, so stop wasting your time. I will leave the link to sign up in the description box down below. So for my US and Australian viewers, Moomoo is also running aggressive reward campaigns, giving out free stocks as well. So everything will be in the link below. Thank you Moomoo for sponsoring this video. Now, following up with the low multiples argument, many would comment that, hey, this time is different because China has decided to crack down the entire tech industry, which would probably result in the permanent impairment of the different tech conglomerates' business model and subsequently, or by translation, their earnings. Oh really? When? How? Why? Before we speak in greater details with regards to this tech crackdown specifically, let's allow history to be our guide. So I believe government regulations need no introduction, especially in the Chinese market. So this is the list of Chinese government intervention in the last 2 decades. So to just pick one high-profile case that happened back in 2008, dragging on to 2009 or 2010, I believe many older folks still have some vague memories behind the milk scandal of Sunlu Group. So long story short, their food products, mainly dairy and infant formulas, contain this chemical called melamine, which resulted in kidney damages in infants. And there were roughly 300,000 children affected. So we are talking about unethical business practices here that affects hundreds of thousands of children. So of course, we can also argue that, hey, games and also maybe the internet may be deemed as opium for the mind. But that's a discussion for another day. Now, back to this entire milk scandal. I'll use 2 of the leading dairy companies in China today to kind of draw some comparisons. And because they're listed, it's easy to see. So both Mengniu and Yili was embroiled in the melamine saga as well, with around 10% of their samples being tested positive. And as you guys know, statistics from China probably can't be trusted, so take this 10% with a pinch of salt. So during the crackdown on milk, Mengniu went from the highs of 17 Hong Kong dollars per share to $3, and Yili plummeted from $5 renminbi per share to $1. But that's of course partly attributed to the effects of the global financial crisis then, when Lehman Brothers collapsed. So this entire scandal has left a very bad aftertaste to both consumers and governments alike. But this was just one of the many incidents that goes to show how unscrupulous Chinese business people can be. But that's not my point. My point is, do you want to take a guess what is Mengniu and Yili's share price today, around a decade later? So Mengniu is trading at 33 Hong Kong dollars per share. That's a 10x from its lows. And Yili is trading at 32 renminbi per share. And that's a 32x from its lows. Nice crackdown you got there. Of course, I'm not asserting that all the companies will benefit after every single crackdown. I'm sure many dairy and milk related companies went under after that scandal as well. But those at the top, probably because of superior execution and management, consolidated the entire market and emerged much stronger after that. And yes, many people will bounce back, citing the recent AgTech crackdown in China that destroyed many in the private tutoring industry. So as I've alluded previously, not all crackdowns are created equal, and you should assess them independently. I personally, however, don't believe that the motivations to regulate the private education sector is similar to that of the technology sector. So you should come to your own conclusion as well. Moving on, the next biggest elephant is a potential Taiwan invasion. So I don't like to spend too much time here because it's all theoretical. It's entirely on the basis of what ifs and what nots and what's China gonna do, what's US gonna do, what's Taiwan gonna do. So if such an invasion were to really occur, whether by force or not, most of our portfolios will sink alongside, unless you buy companies like Lockheed Martin or something. So don't think that you're shielded just because you're in American companies. Maybe for pure play MNCs that were excluded from China, not voluntarily of course, where companies like Google and Meta are slightly more insulated. For the rest of us, I will see you on the other side. Now, the last elephant in the room would be around this delisting and VIE scare. So I will leave the fate of delisting in the hands of the auditors that went to Hong Kong for their checks. Truth be told, nobody has a freaking clue what will be the conclusion of this HEFCA Act. So the best way to kind of hedge away this risk would be to just presume that they are all going to be delisted. But then, begs the question, can you remind me again, why would delisting a company from the US exchange affect the business fundamental? Then some of you will say, hey, what about the VIE structure? You can't hedge away VIE. You're just buying into pieces of papers that have no real value since it's a shell company in the Cayman Islands. And hey, that's true. Funny thing though, I don't understand why those said companies are using their own cash flow from the different operations, and especially money that they earn from China, to buy back pieces of paper to a shell company when they're really out here to scam investors. So you have buybacks, dividends, special dividends. I guess it's all part of a grand plan to make this scam look a little bit more legit. By the way, this VIE thing is not like a new invention by the CCP, and don't take my word for it. I don't have the expertise to make an expert opinion or advice on this issue. Hear it from a top Hong Kong private equity lawyer yourself. I'll leave the link in the description box down below. Now, I'm not saying that the Chinese government will leave this VIE structure alone and not be bothered about it, because hey, this is China we are talking about, mind you. But it feels like a rather meaningless argument because again, we are arguing based on what ifs and what nots. If you really want to go down the rabbit hole of discussing fervently about all this tail end risks, then I think I can't invest in anything, since most of your US companies probably have exposure to China and Taiwan in one way or another. And China can basically screw with anyone if they want to. Because we all know China has a crazy government, right? So how now, brown cow? With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!